Good evening, everybody. Seems like there's a lot of turmoil out there in the American society. This is kind of we're going to start off with the market trend, which is what we're going to kind of be looking at Saturday. If anybody's around Saturday, we'll do about an hour special session on how can we tell when an uptrend might be reversing. And there's a few different indicators other than the signals themselves. As we see when we had the reversal up here in the Dow, then they couldn't get it up above the T-line. And then today was pretty good, or pretty, what do I say, not confusing day, but this is why I always wait to see if something will close above the T-line. Because the Dow was up, what, 300 points, 310 points at one time. Looked pretty strong down here in the oversold area. But as we can see, the final indication was they brought it back down to the lower end of the trading range. Now, the question I put out in the afternoon newsletter today was, when do you go long? When do you have both long and short positions in the portfolio? We could pretty well see that the Dow is in a downtrend. At the same time, the NASDAQ was in an uptrend. So what are one of the basic indicators that there's been a major change of investor sentiment and a trend? When all the indexes have sell signals. So we saw today that the NASDAQ, after trading up 100 some odd points, reversed, did a bearish left-right combo and a close below the T-line, and right about the same level that it topped out before. That's pretty good evidence that we're starting to roll over. Take a look at the S&P 500, same scenario. Bearish left-right combo right about this level, closed right on the T-line. Obviously, if the pre-market futures are opening or showing a lower open tomorrow, you pretty much want to be out of long positions. Yes, but it doesn't matter where the damage or when the damage was done, Bob. It's just the fact that we're identifying that they were selling off this market with great enthusiasm during that last 30 or 40 minutes of trading. And that last 20 minutes just slammed it. So it doesn't matter when it happened or why it happened. We can see that it happened. So we add the other little indicator, when I say little indicator, the corporate bonds. They started selling that off pretty hard. Yeah, the transportation index did hold up nicely. Now it was way, well, I guess, yeah, must have been up a lot further at one time. Jay, that could be. And then the other kind of rule of thumb is that usually the markets will act pretty strong during this week. But that's the rule of thumb. Now, through the years, I've discovered that you don't listen to the rule of thumbs. because now we got a much more clear graphic of what's actually happening versus what everybody thinks usually happens. No, it's not necessarily an inverted hammer. I mean, it could be. But the fact that they closed near the low end of the trading range at the same time they were selling off the NASDAQ, which had been steadily up, that's probably a good indication that the selling that created that inverted hammer in the Dow was people coming back out of the market for whatever reason. So let's take a look at a few of the situations. This one opened positive, but then closed lower. So here's a rule of thumb, that if you bought this today, if this opens lower tomorrow, you close it out, because probabilities are they're probably bringing it back to the T-line. And we don't know whether they're going to support it at the T-line, because we don't know what the overall general market is planning on doing. So we recommended some shorts today because of the market in general, meaning the Dow was heading lower, the NASDAQ was heading higher, the S&P was relatively bullish, but the nature of the market here over the last couple of weeks was that things were very much sector/stock specific. So this is what I illustrated this afternoon as what we call observe the obvious. The obvious was this is in a downtrend. And it's more obvious to us when we start seeing where they took prices up and failed at the 50, shooting star. Failed at the 50, doji, then sold off. Bounced back up. Bearish harami. And then they tested the 50 one more time, followed by a bearish doji sandwich setup. So what's the implication? What's the observe the obvious? The obvious is we're in a downtrend, and every time it came up and hit a resistance level, they sold it off. So the probabilities are pretty strong we're still heading lower. So there was a couple of stocks that had been acting well. Our MCRB was a nice fry pan bottom. But look at our shooting star doji today. That gives us only one prospect tomorrow. It has to open positive and trade positive to stay in it. If it opens lower, they're probably only coming back to test the T-line, maybe, but that's on the anticipation. Oh, I forgot what I was saying. Oh, that it's going to support it at the T-line with the anticipation that maybe the market isn't going down very much more. But right now, all we know is the markets are probably heading lower. So you can see the big fry pan bottom in this one. And you can see pretty much where the breakout area was, where this kind of big J-hook pattern started. But here's the illustration I wanted to make on this was if the market was starting to sell off and sold off pretty hard, especially in the NASDAQ, things like this hold up well because of the pattern, the fry pan bottom. At least it gives you a little bit of extra time to get out with a decent exit level. This is an illustration of, this was a good looking chart. Gapped it up, tried to do a J-hook pattern, but now what's the trend tell us? There's pretty much nothing here. If you've stayed long because it stayed above the T-line, If it trades flat tomorrow, I'd close it out and get my money someplace where the probabilities are giving us a much better view of which way they're going. QuantumScape still stayed up above the 200. It looks like it's potentially trying to do a J-hook pattern, but potentially it lost a lot of the potential today with it trading off a point. So it still has to start showing some bullish confirmation here. You definitely would not want to see this close below the 200. That'll tell you they've kind of given up the ghost. Lucid, same thing. It's still in an uptrend. Just don't want to see it close below the T-line. Walter, you could. Does inverted candle in an uptrend mean anything? Is that Suze, is that an inverted candle? What is that signal? It's not an inverted hammer. What is an inverted? A tombstone. No, not a tombstone. You mean a gravestone? Wanda's got it. That's a shooting star. Suze, if you haven't gotten the book yet, get the High Profit Candlestick Patterns book. The first thing that you want to learn is the 12 major signals. That's the core of your analysis of what's going on in investor sentiment. So there's your, that's a shooting star occurring in the overbought area. If you own Apple and it opens lower tomorrow, what do? You close it immediately. That's what the shooting star told you. And to go one little step further, I was going to get to this later, but now that we're on it, we'll notice where it opened. It opened right here. So what did that tell you? If you see a gap up in the overbought condition, be a lot more alert for the selling or the sell signal. Jim, yes, that's also true. The mouse pad. Okay. So part of knowing when to buy, no, that's not the right way to say it. Part of successful investing is knowing when to buy and knowing when to sell. You're in the overbought area, and the market was turning down. ON was still in an uptrend until the close today when it did a bearish left-right combo. And what other little facet can we see? Look where it kept running into resistance right there. So if I was long, I would have closed this out today. Not negating the fact that it didn't close below the T-line and it could still go up. It's just telling us our probabilities with a bearish left-right combo says let's close it out and get into a better probability factor. Because the T-line and is that primary factor. So Blink was doing nicely. Fry pan bottom, gap up, doji sandwich, chopping around, but then with it trading below the T-line today after gapping down, I told you they're not going up. And this was also a function of, I think, was a Cowan and Company came out and lowered their price trajectory. Let's see. So there's always simple strategies or simple logical facets of candlestick analysis. If you were short, where would you have covered your short? Logic says if there's enough strength for them to get back up through the previous day's open, close out the position. If you were long, I'm sure I did that right. Am I doing the wrong symbol? Apparently. Yep, thank you, Jay. If we always keep in mind what the Japanese rice traders kind of tell us, where do most people buy? They buy exuberantly at the top. What shows us exuberance at the top? When they're gapping up in the overbought condition. Even to this day, I'll get excited when they're opening a stock higher, and I'm thinking, oh man, I'm going to make good money on this trade, and still, I know when I see this and I see it backing off to immediately put my stop at a level that it shouldn't be trading. Meaning if they came back down through the close of the previous day in the overbought condition after gapping it up that far away from the T-line, what are my probabilities? The Japanese rice traders say the probabilities are the smart money is going to start taking profits. I want to be doing what the smart money does. LWLG, bearish left-right combo. If I saw that, I still thought we were in an uptrend, where would have been a logical place to put a stop? Definitely at the low of the bearish left-right combo, because if it came down through there, which way was it moving? It was moving down. And where do you think the first target was? Back here to the T-line. And where were your stochastics? Up here in the overbought condition. So kind of going through a hodgepodge here just to kind of point out the logic that we see in price trends. GAN, if you were short this one, very simple, bullish harami in the oversold area. To stay short, where should you put your stop? Or, yeah, shouldn't come up through the high of today's spinning top, harami. If it does that, where do you think the first target's going to be? They're probably bouncing it up to the T-line. TGTX. This is that bearish doji sandwich closed below the T-line. Bearish doji sandwich staying well below the T-line. And a gap down. Nothing to do on this chart other than just stay short, because all the elements that we have is we know what a bearish doji sandwich result is, more downside. We can see where there would be a logical support level. And when they gap down through that support level after sell signals, this makes it very easy to keep sitting in that direction. More easy when you see a strong sell signal. There's your bearish best friend. And what was the investor sentiment after the bearish best friend? Pretty weak. So if you're lucky enough to catch it here, or even here, or even here, you have to kind of assume that until they can get back up above the T-line, in this case I'd have been a little bit more diligent, which we were, that as long as it didn't come back up above the 50 or didn't show any strength, he just stayed short. So These, again, are the type you like to get stuck in, where you just stay short until you see a reversal signal. Twitter. Good sell signals. Wave 1, wave 2, wave 3. Gidro. Again, observe the obvious. A hanging man, confirmed. An evening star signal, confirmed. And what was the confirmation? One, it closed below the T-line. Two, we can pretty obviously see they weren't going to come up through the 50. So what would be a good confirmation of this evening star signal? A lower open. Now, in 2 weekends from now, we're going to be doing a mini training on day trading, because there are some signals and patterns, the doji sandwich being a prime candidate, where you know the high probability results by seeing the setup. Airbnb, going short on a lower open today, because look what our alert was. Look where this doji occurred. Below the open of the previous day. And what do we know if this opened lower? What type of pattern? Obviously a bearish flutter kicker signal. And are they strong? Yes, the flutter kicker signal is essentially a bearish kicker signal with a little flutter in it. Where do we think the first target was likely to be? Down here to the 50. Should we cover? No, you just started a bearish doji or a bearish flutter kicker, and your stochastics are still heading down. I would anticipate more downside, possibly all the way back down to the 200. Don, the one on this Saturday is going to be when do we kind of see when market trends or stock trends are turning over? That's a free one. The mini one is going to be for those that are interested in day trading. It's just going to kind of give you a taste. That one's the $47 one. That's the mini spotlight. Oh, it might be $47 for non-members, $27 for members. I just have to charge something to take care of the costs. But then, I don't know, I think December 18th, we're going to be doing a full day on day trading. That one's going to be more expensive, but that's going to be oriented toward the people that definitely want to day trade, obviously, or swing traders that want to get in at ultimate trade setups to start their positioning. All right, so that was an alert. When they gap down, that becomes a very high probability trade setup. Oh boy, I probably, at this point, because of the probabilities of it's heading lower, I'd probably put a safety stop at today's open. We're doing the mini one, the mini day trading on December 4th. That'll be an hour, which they usually go to an hour and a half. And then December 18th will be kind of your full day trading session. A lot more detail. Okay, I'm getting this one's been a great one for us. Oh, did we do this one on? Yeah, because of the bearish best friend. Oh, we did A, B, and B. Am I going uphill here, or what the heck am I doing? And we did NTLA. BE was another one, but there's your bearish best friend. You can stay short on this. You also have kind of a dumpling top setting up, so I'd anticipate they're coming back to the 200. And AFRM. You can see the dumpling top. Remember, the dumpling top is a force to the downside, like a fry pan bottom is a force to the upside. And what started the strength of this downtrend? Look at your bearish best friend signal right at the T-line. Failed to hold at the 50 with a bearish doji sandwich. Where's your next likely target? Target 1, target 2. All right, and so again, we did Apple. Apple had the alert that when it gapped up in the overbought condition, most of the day it sat up here, not too bad, but at the end of the day they sold it off pretty hard. You can see this is the type of chart pattern that I love to see, especially if I'm trading soybeans or cattle or something intraday. When you see that, that usually gets ready for this big blast to the downside. That's on your 10-minute chart. Let's see, Tesla. Here's another important ingredient as far as trend analysis. You can see that's your high, obviously. Now you got a J-hook pattern setting up. However, if they do a sell signal before they get to this level, that tells you that now becomes a dead chart or get ready to go short. Unless they come up and go through this level, if they have a sell signal before then, that kind of puts the kibosh on that having a big price move. They usually go sideways or they start selling them off. Amazon, a kind of an evening star signal. The only saving grace right now is the fact that it closed here at the T-line. However, if this opens lower tomorrow, what's it tell us about our uptrend T-line support? Evening star type signal tells us they're selling this one off. And Netflix. The reason you occasionally want to go through your candlestick books that have all the patterns in them and signals is you had an evening star signal. But when they closed it here, what did they do on Friday? They gapped it up and brought it back down. That now becomes what is called two dark crows, which is a sell signal. And if they did another sell signal right here, what did it tell you about the level right here? That was your resistance level. You could start either getting out of Netflix, probably on that lower open, or if you didn't close it on this day, I would suspect your next target is probably the 50-day moving average. That was Netflix. Nvidia. Oh, push off. Same scenario as Apple. They gapped it up, took it up. If you were long, where was your logical stop? Right where it opened. Because if it came back down through there, it was either going to do a doji, shooting star, dark cloud, or bearish engulfing signal. But the fact that they gapped it up in the overbought condition and started to bring it back down through the open, that's a very good place to put your stop. Okay. There was only one sector that seemed to pick up some strength today. That's U.S. Steel. This is Steel Dynamics. Notice how it did a best friend type signal right off the 50 where it kind of supported before. Schnitzer getting ready to break out if it gets up through this level. Wave 1, wave 2, ready for wave 3 on that breakout. New core, retro. Same scenario, kind of a J-hook pattern, ready to break out. And Cleveland Cliffs, that's got a nice left-right combo. Morningstar type signal, close on the T-line, opens positive, high probability it's going higher. All right, there weren't a whole heck of a lot of good bullish charts, obviously, with the day closing off. But Fisker, we're watching to see if this opens positive tomorrow, giving us a doji sandwich J-hook pattern. That's the one I was trying to remember. Thank you, Marshall. Whoops. That's a nice J-hook pattern breakout. GOEV, another strong pattern. There's your kind of your J-hook pattern, pulled back right to the T-line area, and this bounce right here tells you there's probably more upside. Kind of the same thing we saw back here when it came up, came right back to the T-line, and then started right back up again. A bobble breakout on PCT. That one I wouldn't be afraid to be buying on positive trading tomorrow. ZY. If this opens tomorrow, or opens positive tomorrow, what type of signal is it setting up? Anybody? There you go. A bullish flutter kicker signal, yes. Now, remember, Henry, a bullish doji sandwich, this would be a green candle followed by a doji. The fact that they gap this up gives you that prospect of a bullish flutter kicker. Okay, somebody pointed this one out today. NVAX, there's kind of your doji sandwich, bobble breakout of the 200, kind of a big fry pan bottom trajectory. That one can be bought. AUPH, on the other hand, there's your bearish kind of best friend type signal, not a best friend, but a gap down. And this is a perfect illustration that if you had been buying on this day, when it closed back below the T-line, the probabilities are gone against you dramatically. Close out the position. The worst case scenario would be that it opened back up the next day, you could always buy it back. And I'm saying this from as a voice of experience. that every time I've held on to something, not every time, I've learned that any time I see it close below the T line, close it out, because a vast majority of the time, a vast majority, I am thankful that I closed it out. ORMP, same scenario. As soon as you start closing below the T line, the prospects of heading lower are much, much, much greater. There's that slow curve to the downside. So there's some good shorts right now. Ionq. There's your dark cloud. Excuse me. So if you've been long on this one, where would you have been stopped out, or where should you have stopped out? Number one, if it gapped up and traded higher, you put your stop right there. If you didn't do that in time, you put your stop right there. Now you've got a dark cloud and a close below the T line. They might be selling this off with great enthusiasm. DLO. There's kind of your gap down. Still a strong downtrend. Stone. There's your bearish best friend. I wouldn't be afraid to be going short on this. Again, your bearish best friend produces these type of moves. That's just a strong force. YNOX. Oh, whose handwriting is this? It should work. I don't know why it's not working. No, it's not coming up. Chewy, same scenario. If you were holding on to this, as soon as you saw it close below the T line, the probabilities went against you. Close it out. And vary. Kind of your methods rising, but notice what the confirmation was. Maybe that was it. I couldn't get up above the T line. No, that's not working. Methods rising, rules, well, this is a bearish, this is methods falling. Big down candle, indecision, 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 or if they can't get it back up above this level, then that tells you the bears now become confident and knock it, start trading it back down. It's the cat's handwriting is right. All right, so this is where maybe that was it. No, that wasn't it. I'm pretty sure it's YNOX. Let me take a gander here real quick. YNOX. No, I just have to quit drinking while I'm doing those symbols. Bidu, the bigger the signal, the more compelling there's been a change of investor sentiment. That might be it. YNDX. That was it. Thank you, Marshall. Failure to get back up above the T-line, gap down. Where do you think the next target was going to be? Right down to the 200. Okay, so this is kind of telling us that if they open this market weaker tomorrow, probably heading to the 50-day moving average, which would also correspond with if they open this market weaker tomorrow, bearish left-right combo, a failure to hold the T-line, that could be starting some selling. I think that's all I got tonight. There's still some good shorts that can be put on. Might be a bearish scoop type pattern on Airbnb. What do you make of Apple bouncing off the T-line? Gary, what's the question? Oh, coming back and bouncing off the T-line? Scott, hold on to your individual ones until I tell Jim to do the double line. That was the bullish entry. Now you're up here in the overbought area. So if I owned any of this, which I still do, some calls, if this opens lower tomorrow, I close out the position. Because that's the whole point of understanding what a shooting star, especially gapping up in the overbought condition, tells you. Now, even if it opens positive, it needs to stay positive. If this opens positive tomorrow, where do you put your stop? At today's close. Because logic says if they open it positive and then bring it back down through there, now what do you got? A shooting star followed by a bearish engulfing signal. Oh, is it trading down there? I don't. Let's take a quick. Now, oops, I'm showing that it's trading at 161.33 to 161.50, which means it's just trading slightly higher right now. Is it better to close out the position and wait for a buy signal? Yes. Because what are your probability factors up here? You're in the overbought area. You saw a gap up shooting star away from the T-line. If it opens lower, get out of the trade and wait for another trade setup. Okay. I gave everybody the schedule. Oh, you know, we're doing the Saturday session for free, just because most of the time everybody's traveling on Thanksgiving weekend, but with all the current COVID and that sort of thing, I think we'll probably be going from 10 to, I will say 11:30, possibly 12. 10 a.m. Eastern Time. All right. Are there any general questions on candlesticks? If not, Jim, go ahead and do the double line. And in 4.1 seconds, do the next double line. Caterpillar, ruh-roh. No, that's not a kicker signal. Remember, kicker signal is a big candle and a big candle. That just looks like it's probably supported at the 50. So if you were short, probably would have covered the shorts today, but I wouldn't be going long until it closes above the T-line. And VTS, that's almost a kicker signal. Probably strong enough to say you could be buying it. Just be more careful and have your stop set at the T-line. And Chico's, that's a minor kicker signal. The fact they gapped it up right here on the T-line is a pretty good indication they're not closing it below the T-line. UPS acted well today. Wouldn't be anything I'd buy just yet. I'd probably wait for it to break this downtrend. So need confirmation of that Morningstar type signal. Nothing here on AutoZone. Probably wouldn't be long or short this one right now. I think we did both of those. Lucid, you stay long as it stays above the T-line. Blink, we closed out today because it did gap down and traded well below the T-line. Probably coming back to test the 200. That's a nothing chart. I wouldn't be long or short this one, Henry. You do have a bullish Harami, but you need more confirmation. It's a logical place to start looking for a buy, but I'd still wait for it to get up above the T-line, BGFV. And Peloton, stay short. Looks like wave 1, wave 2, going into wave 3. NIO, that is a best friend type signal. Now, you want to be a little bit diligent as far as making sure it trades positive, staying above the 200. So if you were buying this one on positive trading tomorrow, I wouldn't want to see it close back below the 200. To be more conservative, I would probably not buy it until it comes through today's high, telling you they broke out through this level. Yes, so that gives you a little bit pause, because maybe this is the resistance level. That's not what I wanted to do. That's what I wanted to do. Now that is a best friend signal off the 50. So that's why you want to kind of lean toward expecting this one to move higher. Here's a perfect example of why you would set your stop, either there or there. Oh, yes, you could go short, because observe the obvious, a nice big bearish engulfing signal right there. T-Dog. That's a kicker. No, it isn't. But that's a failure at this level. You could go short expecting at least coming down to fill the gap. We did Tesla. Tesla, you can stay long, but if this opens lower, I would suspect they'd be coming back to test the T line. So your doji tells you what you need to do. Another dumpling top. This one you could be shorting on a lower open. Lithium held up somewhat today. If you're long, it has to stay above the T line. If you're thinking of going long, you could be buying this one on positive trading, but notice they closed this below where they opened, so it's not showing a whole heck of a lot of strength right now. And Domo, stay short. Taiwan, yep, this one fizzled. Here's another one where if you'd been buying this one today, when it came down through the day's open, that was not good. I would have closed it out. Now you got a shooting star kind of right here. If it has to open positive and trade positive to stay in it. Myra, you could short this one if this opens lower down through the 50. Gold selling off pretty hard. The December contract was selling off pretty hard. We did Lucid, ENTA. This one you get ready to short. If it opens lower, you got your bearish best friend. If it opens lower, what do you got going on then? A doji sandwich, which tells you they're not going to support at the 50. They're probably likely coming all the way down to the 200. So this is something that I would demonstrate in a day trade situation where we can already calculate that the prospects of that type of move on a lower open is pretty good. That makes for a very good day trade. And the probability of it being a good trade is that if it opens lower, our doji rule, creating the doji sandwich, puts us in the right direction at the right time. Amazon, you could go short on a weaker open, yes. But you definitely need to see that weaker open. Otherwise, if they open it up positive, tells you the T-line's still acting as a support level. Hoya, right now, oh, good short now. Yes. To that support level. If it opens lower, you could be shorting it. Myrna, stay long. Neg, nothing great here other than you're above the T-line. You can just stay long on this one. Charge point, another one where if you're long, you can stay long, use the T-line as your stop. And AMC, nothing. That's a nothing chart, no direction. Probably not too much different. Yeah, right now I wouldn't be long or short Matador. I would be ready to go short on this one if it opens and trades below today's open. Didn't we do D-Dog? D-Dog, you can go short, yes. Unity, you could go short on this one. Gamestop, nice J-hook pattern. You can stay with this one. LAC kind of was lethargic today. If you're long, you can stay long. Just use the T-line as your stop. QuantumScape definitely needs to get back up above the T-line. Oops. Doesn't look anything like. It's supporting at the 200. It may lollygag here for a while, letting the stochastics get closer to the oversold area. Yes, a dark cloud has to open above any of the previous days trading and then close more than halfway down the body of the previous candle. Lucid, we've done, I'll do it again. Uh-oh. Well. Lucid, you just stay long as it stays above the T-line. Smith and Wesson. That one you would have closed out today. You can see the bearish left-right combo tried to support. I would have closed this one out. Yes. Failure. Oh, Roblex. It could, but yeah, it would have to get down through the T-line. For all you know, this was profit taking back to the T-line, so you have to see how it opens. Okay. I don't know what the futures are doing right now. The futures right now are up 18. The Qs are down a wee little bit. So I would suspect we're still in a drift to the downside. All right, everybody. I guess we're doing something for members tomorrow night. What is tomorrow night? The 23rd. I think we have a topic for tomorrow night. A bearish left-right combo, yes, on the S&P 500 right at this level. All right, last one. Way past the 4 point. If I was short, I would have covered the short, but that's about it. I wouldn't be long on this one. Okay, everybody, we will see everybody bright and early tomorrow morning. We'll see you then.